Obidi Prof, welcome to another scalping breakdown, a scalping trade that we took on a GPP USD, and I'll do a top-down analysis and show you the profile, how we arrived at trading the H1 profile and the breakdown for H1 profile. So starting with the top-down analysis, in our community, we trade a top-down and we trade a yearly breakdown of trades. We call it YPD, yearly price direction. And in this YPD, we are saying let our yearly be the narrative. Our yearly be the narrative. And then our 3 months to be the context. And then our monthly to be the entry. So this now is what will help us in coming up with the direction for the whole year. So treating this information as this way, so we start with the yearly, we mark the previous yearly high, it would mark is a fairly red price. Then we go to 3 months, and when you see 3 months, the first quarter, which is January to April, April to June, the first and the second quarter expanded above the yearly. So we mark that candle, the 3 months candle that gave us the expansion. We mark the 3 months candle that gave us the expansion, and then we switch to our entry. Our entry is monthly. It is at this point now that we will begin hunting trades within. We have something in our trading community we call profile progression, and I will show you how we do it. We say you trade another profile within a higher time frame profile, which is actually safer and it increases the probability. So in this point, our monthly is the entry. What are we saying? We are saying in our entry time frame, we're expecting either the first, second, or the third candle to expand above the context swing point. So we're expecting either the first month or the second month or the third month. Now this red candle as you're seeing right now is the monthly candle that is printing currently, still running. That's why it's not closed. So we are saying if we have a monthly expectation, we are expecting that either the first or the second or the third month closes above the 3 months high. We have something called monthly expectation. So monthly expectation is you join my Telegram group and you will understand when you go through the full course. It's for free. It's in my Telegram group. Just join the community and then go through the content. So monthly expectation is equated to weekly profile. And for you to trade weekly profile, this is the trading plan. So we are saying the drawn liquidity is our monthly expectation, which is the previous 3 months high. The buyers, we need to find the buyers for the weekly profile, and that we find the buyers using either the first and the second week of the month will give us a normal bias, or we can use what we call the advanced bias. So in our case, when I go to the weekly now, I want us to focus on the weekly. I will show you the first and the second week were this first red candle, the second red candle gave us a bearish bias, and on the third week we were already bearish. So this let me remove this yearly line because now this is our drawn liquidity. We are saying if we are to continue bullish, then let at least the trade this weekly candle for this week, let it activate advanced bias too. And if it gives us advanced bias too, then we are going to trade this thing bullish. So advanced bias too, we are in short, we are saying either the first or the second day of the week closes above the previous weekly high, it activates advanced bias. So looking at the daily candles, this was on Monday, this green candle was on Monday, this was on Tuesday. So Tuesday candle close above the weekly high, thus activating the advanced bias. So when you come back to the bias level, we'll just say advanced bias, and it is bullish. So the next thing in our trading plan is our narrative. Our narrative is daily. So we will switch to the daily, mark the PDRAs, either the fair value gap or the previous candle high. So let's switch to our daily, and then we mark now the previous daily high. Let's use green, and then fair value gap, it's not there. We don't have a fair value gap. Then we switch now to our context. Context in this case is H4. Remember, we are doing our strategy is called profile time alignment, and profiles is purely time frames that have been aligned in a certain way. So when we say weekly profile, there are time frames that have been aligned within weekly profile. When we say H4 profile, it's different time frames that have been aligned within H4. Now today I'm showing you the scalping profile, which is called H1 profile. So context is H4. So we go to context H4, and we are saying for us to trade within H4, we need to have an expectation. We are saying, what is the expectation? We are expecting either the first or the second candle to close above the daily high. So if we have an expectation, we are saying we are expecting H4 candle to close above the previous daily high. So H4 expectation is equated to H1 profile. So this is now how we arrived to trading H1 profile. So quickly, I'll just list down H1 profile. So H1 profile, our doll is the previous daily high, which is our expectation. Our bias, we are saying at least 2 1-hour candles. So this is where we are still there. So let me just put question marks and then we start. So we are saying at least 2 4-hour candles. So let's play the first 4-hour candle, and we got this candle. It did not close. So coming to the second 4-hour candle, this is what we wanted to trade. So we switch to 1 hour to get our bias. So when I switch to 1 hour, I wanted to expand. So let me play 2 candles, 1, 2. And what did we have? These 2 candles gave us the bullish price action. So this second candle engulfed the first candle, thus giving us what we call normal bias, which is bullish. So our draw liquidity is previous daily high, and we are not saying it's exactly on this line. It's at least before the 4-hour candle close. It should have met our expectation. So how do we trade H1 profile? So H1 profile, our narrative. So we are bullish here. Normal bias. Our narrative is M15. We mark the PDRA. So we switch quickly to M15. I mark the previous candle high. Let me use purple and the fair value gap. We have a fair value gap here. Quickly we go to our entry, our context. Our context is minute 3. We are just observing price action. So we are going to minute 3. We say we are expecting either the first or the second candle to expand above our narrative. So the first candle gave us an expansion. So let's remove this here. The first candle gave us an expansion. So we mark this candle that gave us the expansion. Let's mark it with the lighter. We mark both high and low. The high will give us an entry, the low will give us the stop loss. So our entry in this case is minute 1. That is our entry. So our entry is minute 1. So switch to minute 1, 1, 2, 3. We did not get an expansion. We go back to M3. We are just